Thanks very much, Tim. Pleasure to be with you and be on the Share Cafe platform. Thank you for skipping through to my key slide already. For anyone this is a cut down version of our corporate presentation to try to meet the 10-minute limit. So anyone that wants to see a longer presentation, feel free to get on our ASX platform there. I like to start off the presentations with a Q&A, and I'll just read it out. But what metal is most impacted by technology and electrification? Tin, for its use as an electrical contact in batteries, copper, etc. So next slide, please. So what I like to highlight here is a slide that was put out by the MIT University for Rio Tinto a couple of years ago, and they did a very detailed study into the metals that you hear about every day that are going to contribute to battery technologies and green technologies moving forward. Which one is going to be most impacted by this growth in electric tomorrow? And they highlighted tin as the number one metal that'll be affected. Obviously, the main use of tin currently is as an electrical solder. That makes up 60% of the offtake of the tin metal space. For those that don't know, solder is effectively the glue that holds together electrical circuits, and effectively between copper in wires and tin in the circuitry, the critical components for moving the electrons around electrical circuits. It additionally, to solder, plays a role in tin chemicals, which work as stabilizers. It does still play a role in some traditional batteries. It has a future role to play in the anode in fast charging lithium ion batteries, as well as other smaller sectors, including the humble tin can, which tin still, after all these years, plays a major role. Move on to the next slide, please. So that forecast from Rio Tinto and MIT from a couple of years ago has I guess, been validated in the current tin price movements. As you see from, this is a chart for about the last 12 months, but tin price has effectively doubled. The tin price on the LME was trading just below $34,000 as of last night, which is a all-time high for the metal. Obviously, this is quite exciting for us in the tin space, and for those of us that have been, I guess, working, understanding this industry and the forecast supply shortage. It's validation for all the hard work we've put in to date. As you see, not only is the spot price gone over 30,000, sitting up around 35, both the 3-month and the 15-month forwards are now over $30,000 as well. And for a metal that's traditionally in backwardation, this is giving a lot of people confidence that prices are going to hold above these levels and support investment into the sector. So next slide, please. So this is a slide that was done by the International Tin Association. Sorry, the chart on the left. International Tin Association is the main body. They do a great job of forecasting supply and demand in the industry, of which is a challenging one. The majority of the market majority of suppliers into the market are state-owned enterprises, and artisanal supply makes up a decent portion as well. There's very few listed entities producing into the tin market, which again makes it very hard to get good data on supply and demand. Anyway, International Tin Association does a fantastic job. You'll see up till 2020, the tin market's pretty much in balance, and hence why the prices weren't running away like they have recently. However, as 2020, COVID did affect some of the producers, the smelters, especially of tin, which has led to a supply gap. But that gap is very much, the modelling is supporting that gap is going to be sustained for the coming future, which for producers like us is the gap in the market we need, and we think prices are going to stay up to support us coming on and delivering tin into that market. The modelling you see here is based on a 1.8% growth. The International Tin Association thinks that's on the lower side of the possible growth. Growth in the demand side is probably going to be likely closer to 3 or 4%. So they're currently projecting a 30 to 40,000 tonne deficit in tin supply into the market, which, as we said, should support other producers like ourselves coming into the market. Additionally to that, the International Tin Association forecasts that 90 to 95% of that tin supply comes from countries that are somewhat considered conflicted, like conflict tin, for instance, out of some parts of Africa. What that does for us has two projects in sustainable and developed jurisdictions is the demand should go up. So the European Union has very strict guidelines that came in the start of this year, minimising the supply of tin into the EU, and the US is soon to do the same. So move on to next slide, please. Our main project is the Oropesa Tin project, which is in Spain. We acquired that from a Canadian listed company called Eurotin 2 years ago for $6 million worth of scrip. That project was well drilled and quite mature, and is in a region that's a mature region in Spain with a couple of large operating assets. So I'll move on to the next slide, please, seeing we've got tight on time. We have recently announced that we're going into a DFS study following a scoping study that was done last year by the company. We've recently also done an infill drill program, which has given us a lot of confidence in the resource that we're basing the mine around. In addition to that, we've got a number of other technical programs, metallurgical, geotechnical, groundwater programs currently underway to give us the underlying data for that feasibility study. Tin price giving us a lot of support that made that decision to go straight to a DFS and skip the PFS stage. But we're very confident the decision is the right one, especially with the strong government support at the moment in the European Union. So move on to next slide, please. As I said, we've currently done an infill and some upstrike drilling on the resource. The 3 million tonnes there that previously currently classified as an inferred with a lower confidence level. We've focused on trying to upgrade them. Obviously, when we release the resource in October this year, our goal will be to shift a lot of those tonnes up into the measured and indicated categories. That will allow us to use them in our feasibility study and try to convert them into JORC ore reserves. I'll move on to the next slide, please. So an economic study we did last year had about 750,000 tonnes feed, producing about 2,500 tonnes of metal per annum, generating $48 million worth of revenue US per year. Now, notably, that was done at a $19,000 750 tin price. As you've seen from the current graph earlier in the slide deck, we're currently operating at a $35,000 per tonne commodity price. So there's huge sensitivity to this. The NPV of running that study last year was $92 million NPV and 25% IRR. So if you flick to the next slide, please, just sensitizing that to the current spot price. So you're highly sensitive to that, which is no surprise in a mining project, but we're close to a $400 million US NPV running it at the spot price against the 94 million that we ran last year. So Oropesa, very strong looking project. We're moving forward with it. We should be funded well into that feasibility study. So yeah, very excited by our number one asset. So next slide, please. Moving on to our second asset, it's a Cleveland Tin project. The company's held it for a few years. It's an old underground tin mine that was closed in 1986 when the tin price collapsed. We picked it up as an EL about 8 years ago. We've currently done some JORC resource work off some updated drilling. Currently got a 7.5 million tonne resource there as well with 0.75 tin, which is a decent tin grade. It already has an established decline, which we're currently looking at doing some work on re-establishing. Next slide, please. In addition to that work on the decline and having a look at historic mine studies, we additionally have announced that we're going to go do 4 upstrike drill holes there, a long strike, I should say, drill holes for about 1,000 meters. This is to target some historic SP anomalies that have been identified in the 1970s but never drilled out. Earlier this year, when COVID allowed us, we got into Tassie and did some we did some rock chip sampling in those same locations and got some very good readings from surface: 0.7 tin, 0.6 copper, 13% zinc. So again, a number of data sets that gives a lot of confidence that the Cleveland project could hold more mineralization. So moving on to the next slide. Corporate overview, currently trading at 1.7 cents, market cap about $65 million. Got 3.9 billion shares on issue, cash of $6 million, which should get us a long way down these work streams. A little bit of debt and enterprise value of $63 million at the moment. I think we're trading slightly higher today. So move on to the next slide. So just in summary, while I finish off at about 10-minute mark, we've got 5 catalysts that we think investing in the company, and a lot of value to be added. Firstly, our Oropesa updated mineral resource estimate, which should be out around about October. We finished drilling on the project last week. We're then moving through, as announced, into other on-ground development programs to support a feasibility study. That's core technical work that will give us the confidence in data and engineering studies to take the project through detailed mining engineering and declare an JORC or reserve statement. We're obviously also about to lodge our environmental and exploitation license in Spain. In addition to that, we're doing the extra drilling and assessing historic options at unlocking the development in Tasmania. And I think I'm done. I'm happy to talk to Tim.
Thanks, Joe.
Thank you very much.
Bang on time. Thank you. Now, a couple of questions here. Is funding readily available for Oropesa development at feasibility scale?
Yeah, well, as I said in that last slide, we're sitting there with about $5 million worth of cash. That should get us a long way through that feasibility study. So yeah, currently we're well funded. We do have a number of options out. There's about $6 million worth of options out there as well, which are currently both sitting in the money. So we believe with our current cash flows and the options, the option money comes in, we should be well funded through the back end of that feasibility study.
And would you consider a partner there to kind of scale up quickly?
We're open to all options. However, we're pretty keen on developing the project as far as we can on ourselves. We think we're adding a lot of value, and as with anything, the longer you wait to partner, the more value we should bring in for our current shareholders.
And are there any environmental issues to consider, particularly in Tasmania?
In Tassie, we've got an EL there where there's nothing pressing. Obviously, it's an old historic mine with a number of historic mining. I won't say problems, but issues just with sites like that. That liability with the old mining asset sits with the Tasmanian government. We've picked up an EL, so we haven't yet inherited those, and we think all those risks are manageable as we move forward with that development.
And okay, sorry, I've just lost that. And you've got 3 billion shares on issue. Any consideration for consolidation at some point as well?
Oh, and you've got billions of shares. It's always a question people ask, and to a large extent, it's certainly something we'll look at the appropriate time.
And tin's kind of off the radar when we're talking EV batteries. We always talk lithium or graphite or whatever those other components are. Why is that with tin?
Well, tin probably doesn't make up a large proportion of those batteries or of those metals, but I heard it described really well recently. It's called the spice metal, where effectively if you're looking at a menu at a restaurant, it might not be listed as a key ingredient, but it is everywhere. It's like the salt and pepper. Most of the Tesla isn't leaving the garage without it. The computer and the semiconductors aren't firing up the computers without tin. So it's critical to everything, and it really is a volume game. Small volumes of it in lots of places.
That's a really good way to put it, actually. And just one last question: what are the key risks that you need to focus on moving forward?
Key risk I guess we've got 2 different projects there. Obviously with the Spanish one, working with the government and getting through our approvals, that's obviously a key one that people highlight. European Union, we think there's more advantage at the moment being in the European Union than risk, due to that just their absolute desire to have intra-EU sources of key metals. So we're actually getting a lot of support from the government departments there. But as a number one issue that people raise with me, that's probably the key one.